And welcome everyone. Go ahead and kick this off. Welcome to Trading Coaches Playbook. My name is Brandon Wendell, and hopefully the camera will pop up here. There it is in a second. All right. So welcome everyone, and good morning, or well, afternoon for me. Just turned. So lovely to have everyone here. Thank you. Yeah, I got my dog in my lap. Here's Lucy, the Frenchie. Say hi, Lucy. Hi. Anyway, she was whining and wanted to come in my lap just before the class started here. We'll go ahead and kick this off. Just a quick reminder, we are not broker dealers or investment advisors. We're doing this from an educational standpoint. So anytime I look at the markets, I'm not giving any personalized recommendations or telling you to buy, sell, or hold anything in particular. All markets do involve risk of loss. We can't do anything about that, but just try to manage the risk. And we are not subject to trading restrictions, so we can have positions in the markets or initiate one at any time. So welcome. And again, this is Trading Coaches Playbook. I'm Brandon Wendell, and we're going to be talking today a little bit about how to handle sideways channeling markets. So before we do get this kicked off, just a quick reminder, you can stay in touch with us. We have a lot of things going on all the time. Workshops. We have free online workshops. Obviously, the Trading Coaches Playbook here every week at noon Eastern. We also have Mondays from noon to 1 Power Hour with Rob. And I run quite a few programs here. The E-Mini Think Tank, which is a futures analysis and education room. We meet 3 days a week. And I also have a lot of education on how I look at the markets and trade the markets, as well as how to find opportunities, trends, all that good stuff there. Like I said, we meet 3 days a week for 2 hours to analyze the markets and find opportunities for us. I also do a little bit with options as well. It's called the SPX Cash Flow Secrets program. And I'll talk maybe a little bit about that. You got the links that are popping up there. So thank you, Alyssa. That one is 0 days till expiration types of income generation. So we're just looking for short-term, small gains, but consistent gains. And we'll talk a little bit more about that. Yeah, you can follow us on the socials as well. I'm on the socials personally. I've got the pretty much everything. LinkedIn, Twitter. I'm not on TikTok. I got to start doing that, I guess. But Rob has done quite a bit with Wealth Builders HQ on TikTok, so you can find some videos there. And these are the programs I mentioned. The ones I didn't mention, that's a spread trading, but not with the options. It's with the futures market, so a little more advanced, the Wealth with Spreads program. For those who are beginner traders to futures, I have a futures boot camp that talks about how to trade those as well. So yeah, quite busy, as I said. Sorry, there's a little noise outside, but hopefully that goes away in a little bit. But basically, we're talking, as I mentioned, and let me just put in, let's see, what can I put in there? Let's try SPY. Or actually, no, never mind. I want to, it's good, QQQ. Sorry, trash truck outside. Right now, we are in a trending market, as you can see on my chart. And that's one of the things we need to figure out. First of all, how do you know you're in a sideways or channeling market? Well, when it comes to your trading, one way you'll probably figure it out is if you keep getting stopped out and seeing the prices just turn around. You know, you go in for a long and buy, and all of a sudden goes up a little, turns around, drops right back to where you got in. Or if you're shorting, same thing. You get in, starts moving down, bounces, comes right back to where you got in. So I think we're going to have to go back a little bit to see several years. Oh, there we go. We've got this little pocket. There you go, Lucy. Good girl. This is right here, 2011 to roughly January 2012. So for 1 year, 2011, the NASDAQ was for the most part channeling. Now, this one's a little unusual when it comes to channeling, because you would normally think channeling would be just sideways movement, right? Just back and forth, bouncing between the upper level and the lower level. Well, it doesn't necessarily have to be that way. Another way prices can channel is in kind of a, well, in this case, it actually widened. And you can also have formations where you get the channel pointing upwards or downwards. But you can see the prices were actually widening, but overall, at the end of this, they didn't really get anywhere. And then they narrowed and kind of formed a diamond formation in that case. If I drew the points out, they would actually connect. But that is still a channeling formation. So one of the ways you'll know that the markets are channeling, and channels, by the way, can happen on pretty much any time frame. It could be intraday, or this is a weekly chart. You know, if I were to go to daily charts as well, you'd see some channeling. But typically, as I said, how do you know? There we go. Let's move that over a little. Well, the answer to that, I said one already. Trades are stopped in both directions, or price keeps coming back to your entry. And got to fix this. There we go. All right. So yeah, if we keep seeing that prices keep returning back to where we got in, it's just going back and forth. We're not really getting anywhere. We get a little profit and then it turns around. We're probably channeling a little bit. Another way is to look at momentum. So I happen to use the RSI as an indicator, and it's interesting because when it comes to indicators, and we'll look at momentum indicators. When it comes to technical analysis, there are a ton of different indicators. If I go to technicals, you can see all these indicators. I'm on TradingView. This may not even be all inclusive. Oops, nope, that's not what I wanted. Where'd it go? I lost it. Anyway, you go back, bring back the indicator box. There we go. I was just trying to reshape it so you can still see the text, but I guess I'm not going to be able to do that. So anyway, you can see again, there's plenty of indicators available here. And for the most part, there's really just two types of indicators. You have momentum indicators, and that's measuring trends. Basically, it measures direction, strength, or lack thereof, and marks possible reversals of that trend. There we go. So momentum indicators, excuse me, nope, got an alert going on there. So momentum indicators typically kind of tell you which direction that the trend is typically traveling. And when the trend is getting stronger or weaker, stronger trends tend to continue. Weaker trends are possibly going to reverse. Not always, but they're possibly going to reverse. Should probably mark that as well. And then we'll put that sub note. Let's see, strengthening. Notice I didn't say they always continue, because in technical analysis, for the most part, everything happens except for when it doesn't. What that means is nothing is foolproof when it comes to the markets and technical analysis. There's a probability that we can measure and see that the probability of something happening might be high, but there's never a guarantee that it's going to happen, of course. I was checking something out there. Okay. And that would be B. So weakening trends are more likely to reverse or at least pause. So momentum indicators, we've got things like MACD, ADX. There's quite a few of those out there. As I mentioned, I'm actually using RSI down here. And the RSI that I use on TradingView is just the normal RSI, as you can see. And I don't actually show the moving average of the RSI. I just don't use it. So I think I have it hidden. Yeah, you can see I've got it turned off, and Bollinger Bands on the RSI. I don't care. I don't need those. But my settings, you'll notice I changed it a little. Instead of overbought being 70, I made it 60. And oversold, I moved it from 30 to 40. It just works better for me. And I read this as a momentum indicator, not as an oscillator. So let's talk about what oscillators actually are, because that's the other type of technical indicator. Well, oscillators, they measure overbought and oversold situations. So usually those types of indicators will have lines on them indicating that overbought and oversold. So they have those lines there for the overbought, oversold areas. Okay. Keep this looking good, I think. So, and of course, if you ever want to do screenshots, you can. I have no problem with that. Overbought, oversold areas. There we go. Yeah, I can show you my RSI settings again. That's not a problem. So oscillators, and this is technically an oscillator, the RSI, because it does have an overbought, oversold area. So yeah, you see RSI length. I'm using the default 14 periods based on the closing price. And the moving average I don't use, so I don't care about that. And it just goes to whatever time frame it's on. It includes gaps, no big deal. I think, does it say? Gaps, let's see. Gaps are filled in with a hard time. I don't know. I'll have to figure that out if it makes a difference, but I just use the default. And like I said, the only thing I really change is right here, the RSI upper band 60, RSI lower band 40. That's what I change. Other than that, and I also don't use any of these extra pieces there, but that's all I do. And this helps me with identifying the trend and when trends are getting weak potentially. So oscillators are usually more useful in channeling markets. Momentum indicators. Actually, let me do it this way. There we go. So in sideways trending markets, momentum indicators are usually useless because they measure trends. They're best for trending markets. Doesn't matter what it is. By the way, these indicators, all this stuff works on futures or Forex or stocks. It doesn't matter. They work on pretty much anything and everything. Charts are charts. So momentum indicators are usually best when the market is actually trending in a particular direction. But when the markets go sideways, those indicators become pretty much useless. Instead, oscillators are best for sideways markets. They can be lagging in trends. So if you have a strong uptrend or downtrend, the oscillators can sometimes, not always, be a bit lagging and not really give you the best information. The buy and sell signals are almost always behind. And again, if you want to know what an indicator is it, an oscillator? Is it a momentum indicator? Just look. And you might even be able to look it up. I'm not sure if they'll list it somewhere. So if I go to ADX or ADI right there, average directional index, I click on it, and there it is down below. I do not see an overbought or oversold line, and I click on it and see what the inputs are. It's just showing lengths. That is a momentum indicator. It is measuring the momentum of the price. And I'm not sure if it does it on this platform, but many platforms, when you go into them, you can actually get some notes or information on that indicator. Let's see, there's a question mark. There we go. Show description. ADX, specific indicator to determine the strength of a trend. Well, that tells me right there, that's a momentum indicator. Oh, I spelled trend wrong. Okay, thanks. Oh, the trend is not to trend. Okay, I didn't see that. Yeah. Well, we may not get trends at times. Like I said, if we go sideways, actually, technically, that is a trend. Sideways is a trend. Sideways trend, channeling trend. But again, any of these indicators you click on, Klinger oscillator. Well, I had an oscillator in the name, but actually, interesting, it does not have overbought, oversold. So I think that even though it's showing as an oscillator in the name, it may actually be more of a momentum indicator. Let's find out. Again, I'll go to indicators. I just randomly clicked on that one. Where is it? Klinger oscillator and definition. I know TradeStation has that as well. You can go into the definitions and money flows long-term trend. That is a momentum indicator, not oscillator, even though the name says oscillator. And it shows it in moving averages. Moving averages are momentum indicators. So it's interesting. The name is actually misleading because it is not an oscillator. It is more of a momentum indicator. So again, you can just click on different ones. Price oscillator. Again, description. Technical tool, measuring momentum. So once more, it's called an oscillator, but that's misnamed. And I learned about this, the oscillators versus indicators, when I was getting my CMT designation, Chartered Market Technician. I basically have a master's degree in technical analysis, so I had to learn like 700 different indicators and how they actually operate, what they measure, how they measure, all that good stuff. So many of these that are labeled oscillators are not actually. They're more of a momentum indicator. It's kind of funny. So again, momentum indicators are usually best when we are trending, as they'll tell you how strong the trend is and when it's ending. Some of the signs you typically get for weakening or reversals in trends is not the buy and sell signals, not the crossovers. A lot of times when we're looking at, say, stochastics, when the percent K crosses percent D, that is either a buy or sell signal. Those, as I mentioned, will typically happen after prices already moved in the opposite direction. So instead, we're going to be looking more for divergence. And there's two types of divergence. You have positive and you have negative. Well, positive divergence can end a downtrend. They call it positive or bullish divergence. And basically, that's when price is making new lows. It's going down, but the indicator is making higher lows. It's showing you that the momentum is not as strong, even though we're trying to make new lows in price. So I don't think I have an example right here. Let me see. Actually, let me go down to daily, perhaps. Yeah, here's an indication of it. This is on the QQQ daily chart. And you can see on the right-hand side, price making new lows. Well, if you're going to continue the downtrend and new lows, you should also have more momentum in that direction. Well, looking at the RSI, we see we made a low and a higher low. So what is that telling me? It's telling me that the momentum is weakening even though prices went down. That's not sustainable. So that is a positive divergence or bullish, whatever you want to call it. And it doesn't always lead to a reversal. Okay. It can also just be a pause. One of the key things to look for is at this level where this is occurring, are we at a prior demand zone? What I should say is price. Yes. Possible trend reversal. No. It could just be a pause in price. That's all. Last line of best indicator signals. I think it was, I have to go to the weekly again. Hang on. Best indicator signals would be divergence, positive and negative. And I didn't put in the last one. Negative divergence or bearish. And uptrends. Let me fix this a little bit. You can see the text. Oops. And there we go. Probably should be using some different colors as well. So yeah, if you want to do a screen capture, that be my guest. Sorry, the trash trucks are making tons of noise outside. Nothing I can do. So there you go. So again, if I go back to the daily chart, and on this move down, we can see we lost momentum, even though we were making new lows. And let's see if I go back in time a bit. I don't think it was really a good demand zone here. The demand really was a bit lower. Origin of the move there. And the buying pressure. Might have been tested already. In Windows, there's a little tool. If you go to your Windows key and type in snip, it'll bring up the snipping tool. And I actually have it pinned to my taskbar. So right there at the bottom, little scissors with a circle. You click on that and you can just do a screenshot of the whole thing. Or I think you can do a control print screen. You hold that down, then go to like a Word document, you can paste it there, Control V. So anyway, not really great demand, but once more, we had that positive divergence right there. So if we're not at demand, like I said, we might just have a pause in price, not a reversal. What happened? Prices pulled back and just kind of stayed close to that area for a little while before it finally rallied. But it did mark a decent possible end to that downtrend. And as a matter of fact, we have the other divergence right here. Price is moving up. However, we don't have momentum to sustain that, do we? That is a negative divergence right there. Oops, moved off the side. Oh, you're very welcome. So right there, as you can see, we kind of moved off and lost our momentum. Oops, sorry, I was trying to, oh, what happened there? Negative divergence. Okay. Oh, I still have, oh, there it is. Okay. I do have it open. Never mind. I wanted to show you something, but I had the wrong screen open. Apologies. Trying to get it fixed. So as you can see, that divergence happens just before prices change direction. So right there, the divergence was confirmed when this candle made higher low and higher high. And you look at the RSI reading there and you see the divergence, so you can take action. And then we move up. Now, if I added in a lagging indicator, let's say stochastics. So right there, we got stochastic. Put it in. And we'll make it a little bit easier to see. Thicker lines, basically. Oops. And that's an oscillator because we have 80-20 for the overbought, oversold. You can see right away, it has those numbers, upper and lower. Okay. And actually, let's see what it says about it. I go to stochastic, definition, and it says range bound momentum oscillator. So technically it's it's not a momentum indicator, it's an oscillator. It's measuring overbought, oversold on the chart for price. Now, I was saying that one of the problems with that oscillator is that it may be a bit lagging. And I said that on this red candle, as soon as we broke to a new high above the green one, we were basically seeing the reversal, and the weakness in trend told us it was likely to go up. So where was the buy signal, though, on the oscillator down here? Well, perhaps right here, you see that crossover on, which candle is it? Oh. Right there on the green candle that crossed over. So that crossover didn't occur until that green candle finished, because this is based on the closing prices. So perhaps at the beginning of this candle, you did have a buy signal going as it was crossing up above 20, and the, was it percent K was crossing above percent D? Yeah. So the slow stochastic crossed the fast stochastic, and then you got another buy signal pretty much on this green candle after that crossed back over. So you had a buy signal, sell signal immediately as it crossed down, then back up to buy signal a little bit late. So obviously, if you're looking at this in the moment, it could be a little confusing with that RSI, right? So right there, we got, oh, time to buy. And then, oh, wait, no, might be time to sell. It crossed back down. No, it's okay. It's time to buy again. Meanwhile, the RSI just pretty much told you, yeah, we're very oversold, but we've got a divergence is likely to bounce. And there we go. Now, the same thing when we get to our positive divergence. What is beeping? Sorry. Got things kind of, I keep hearing pings. I don't know what it is. Let's see more. No Q&A. It's just the, I don't know. Maybe it's just me hearing things again. Just kidding. Gosh, I got so many things open. Shouldn't be, I don't think I had anything in messages here. Nope. Anyway, I'll ignore it for now. Sorry. So again, moving forward, where's that positive divergence that we marked? Here it is. And once again, as soon as that red candle was formed, now we have lower high, lower low. We can use that measurement on the RSI to let us know we have a negative divergence. We're likely to turn down. Well, the sell signal didn't happen until the next candle right here. I know it looks like it happened on this candle, but in real time, those two would not have been separated like that until the next candle formed. So there, the signal was late, right? If we were using just the RSI as a momentum indicator, wondering when the trend was going to end, we would have had our answer on this red candle as soon as we broke that low. But if we were looking for a sell signal on the stochastic or other oscillators, it wouldn't have happened until here on that candle, one candle late. And that's quite a bit of a distance in price, about 3 points or so. So it can definitely cost you money using the wrong indicators at the wrong time. So going back to where we were, bring this back to a weekly chart, 2011. There we go. Perfect. Well, almost. That's better. Anyway, when we're moving sideways, you'll get the momentum indicators kind of just going sideways inside a range, just like price typically is. So when we were trending, for instance, here on the Qs, there's a nice trend to the upside. You can see the momentum indicator is rising and still showing strength. Maybe a little weakness right there. That was our warning because we made higher highs in price. However, you look at the indicator, and that is showing pretty much the same, maybe even a little less momentum as I zoom in there, a little better for you. So now we're moving up on less momentum. Think of that momentum there on the RSI as bridge supports. The bridge is rising, but the supports aren't going up with it, so they're not attached. Well, if you don't have the supports attached, you're likely to fall. So that was our indication that we're pulling back. And sure enough, we did in price, we pulled back. But then the RSI kind of goes sideways, and notice it's stuck in that purple range between 60 and 40. So we're not becoming oversold, we're not becoming overbought. That's an indication that we may be sideways moving and in a channel. It barely popped out a little bit, but again, can't get above 60 or below 40. There we finally went above, and we actually have our bullish trend again. I actually see another instance back here. Once again, we're in we're in a bullish trend. And in the bullish trend, you can see we tried to go down, couldn't go below 40, went back up again. We're not above 60. That means we're trending sideways. We got a sideways trending, sideways trending market. Absolutely. And as I said, this can work on pretty much anything. If I go to Euro, US dollar, and I'm still on the weekly chart, simply looking for basing or sideways channeling markets. Here's a channeling market. First, we were rallying. That's an uptrend. Once again, before the end of the uptrend, prices were making highs. Momentum was not. That is the negative divergence. And when we dropped, initially it looked like it was going to be a pretty good drop in a bearish trend. You can see we made fresh lows. So we're dropping. But then the RSI is pretty much going sideways. Look at that. Now we are going below 40, but remember what I said about channeling and trends. It doesn't necessarily have to go down. You could just go and channel, up. It doesn't have to go sideways for the channel. You could have a sideways channel that is angled in a particular direction. There's our channel. It tried to pop up, but again, we're still channeling. It just changed the angle slightly. Come on. There we go. And now we're getting a little more movement. You can see, but still not out of the woods yet, still a bit sideways. Now we're trending again. And we can see because we went way outside that range. So one other way of knowing, let's go back to QQQ weekly with my notes. 2011, there it is. Oh, I need to do this, sorry. There we go. Really? Hold on. I have to do it this way so I can see it. And now widen it. Oh, that's why I had this too big. Okay. Voila. All right. So where do I want to put that? Oh, how do you know the price is channeling? We have a lack of momentum. The trades might be getting stopped out in both directions. And another way you also know, volatility drops. Volatility is a measurement of, well, specifically implied volatility. I should say that. Is, let's see. So implied volatility is the expectation of future price movement. So if you have high volatility, you're expecting in the future that there are going to be very big, very violent price swings. But if volatility is dropping, it means that you are expecting less, smaller moves, less severe movements, either up or down. And I was just checking something out on the other page. There we go. So if, let's go to, let's say, Apple. And on Apple, let's go to a 4-hour chart. It really doesn't matter what time frame, as I said. And what I can do is under indicators, we can look for volatility. Actually, specifically, we can look for implied volatility. Historical or statistic volatility is price movement in the past. Implied is looking forward. So we have several of them here. These are ones that people have created. Again, you can get the notation of what it's actually measuring here. I think this one was pretty decent, if I'm not mistaken. And if I just go to technicals, let me see if there's anything here. Nothing there. Interesting. If I type in implied volatility, yeah, it just brings up these suites or whatever it is that people have created. So I put in, which one I put in? I think that one already. Implied volatility, I don't know. There's several different ones. You got to find which one works the best for you, which one you're actually trying to read. And I'll see what that implied volatility suite is as well. Why not? Or did I not put in the other? No, I did. Oh, that one that I put in here, IVP only works on daily, which is fine. Okay. So once more, I'll thicken the line so we can see it. Oh, definitely don't want that color. And there we go. Oops, one more thing. Inputs. It's looking back almost a full trading year. 1 standard deviation, that's fine. And then this one, let's see what it's actually measuring. Calculation of implied volatility. They have different models they're using. I have to play around with it a little bit more, I think. But we're fine. So, I'm going to take take off this RSI for now, or at least hide it. Actually, I'll remove it. Sorry. So what I'm looking at now is this volatility or implied volatility. And I think the purple, again, what is the input there? That's days below the implied volatility. And then IV rank from high to low is the green. So the green's telling me based on the last year, the volatility high and the volatility low, where are we currently sitting? Well, it looks like we're at 48 percentile. So we're kind of in the middle there. When the percentage is low like that, meaning we're very low compared to the previous implied volatility for the past year between the high and the low, then you obviously have very low volatility. And low volatility, small price movements. Really, I don't need this one, the purple. And actually, I'm going to change that to blue, see it a little better. There we go. Yeah, I'll get rid of this one for now. So with this indicator, when it's pegged on the bottom like that, it was doing it several times here. You see, it just went sideways and flat. Typically, you're going to be channeling right here. Maybe it was a little forward. And yeah, this was definitely a channel. It was moving to the upside, but it was still a channel nonetheless. And it went up just a little bit and then came right back down, also telling us that we're probably channeling. And that's what we're doing there. Channeling this time, instead of downwards, we're channeling upwards on this daily chart. So when you're in a trend, either up or down, the volatility might rise. Historically, volatility usually rises on downtrends more than uptrends. More than when it moves upward. However, but I should say if price moves up fast, volatility will rise. So in a way, it's kind of like a measurement of how fast price is moving. So we go back just a little bit here. You can see that when the price was moving up, the volatility was dropping. And actually, we could claim that we were in a channel there. That volatility was dropping because we were in a channeling uptrend right there. Look at that. And then when we were moving down, it was the opposite. As prices were dropping, it was also in a channel. It accelerated a little bit to kind of break down, but not by much, but volatility was rising. So when you see volatility rising, typically you are in a trend. If volatility drops or flatlines, basically going sideways, then you're probably in a channel. Okay, so those are a couple ways of identifying when prices are going into a channel or possibly even trending sideways, when you lose momentum or you lose volatility. So again, going back to QQQ, 1 week and 2011. Almost got it. There. How do we know? Might be getting stopped out in both directions, or you can't really get very big wins. Prices move out of the area and they come right back, and then they move out and they come right back. If you have a lack of momentum on your momentum indicators, you're probably moving sideways in a channel, or if volatility drops, then you're probably going a bit sideways or channeling as well. Now, what the heck do we do when we're channeling? Okay, I was also checking, I clicked the wrong one. I was mentioning some of my programs that I do, and in the programs, it's a mix of, education and application. So for instance, if I go into, where's your SPX cash flow secrets, that's the one I do with the options that I mentioned. This may not have all of the education in it, but it has quite a bit. It's self-paced education, by the way. So you can go in and click on a video there's also documentation that goes along with the videos to help you learn the strategies as well as being able to read the price. So I go into trading routine and finding zones. I have a section on trends as well. Actually, what's even better, I should probably go to that. Again, this is the SPX Cash Flow Secrets. That's my options program where we try to generate short-term income using 0 days till expiration options on the SPX. However, the E-mini think tank probably contains most of the education. And that one, we not only have the education, but we get together 3 days a week to be able to analyze the markets and apply what we learned. Once again, there's tons of education there. So I go into things like, again, how to find trends, different tools that you can use, order placement, options on futures, even RSI, how I use it. You know, because I said, I use it more of a momentum indicator than anything else, how to find the right targets. So all kinds of good stuff in there. My zoning techniques are in there as well with trading routines. And of course, there's documentation with all of it as well. So this one has a ton of information and education if you're interested in joining that program. Again, you can click the links that we're putting into the chat. But basically, going back to, oops, wrong page. That's right there. Going back to this, there's other things you could do to find sideways and channeling securities. Oh, thank you, Will, saying that everyone should learn the zoning techniques. Yeah, I would love that. So right here, I went on TradingView to the stock scanner, and they have a scanner for stocks, Forex, ETFs. So there's, I mean, again, you can do this on multiple programs or platforms. I even have Thinkorswim, and there's not analyze, scan. There are scanning techniques you can utilize here as well. But basically what I was doing to try to find kind of channeling securities, I simply went US only, or I should say stocks only here. I did $20 or above, and change over the last month was basically 0 to 0.5%. And even year-to-date performance, which is pretty much the past month anyway, was less than 1%. So I'm likely to find sideways moving securities. I can probably even add in, let's see, technicals. And let's see, is there an implied volatility suite there? No. Anything on volatility? No, unfortunately. But yeah, you could build a scan for channeling stocks, exactly, or channeling securities. But unfortunately, I'm not seeing what I would need here. Momentum averages rating. I don't know what that would be. And what else could we do? Well, since I like the RSI, let's see, RSI. Now there it is, relative strength index. And now on the scan, custom, the RSI for the past week is between 40 to 60. We're in the middle range. Rather than being overbought, oversold with the good momentum, now we're pretty much moving sideways. It shows volatility here, but I couldn't do, that's really weird. I couldn't actually do a scan for the volatility, could I? Maybe it might be somewhere else. I don't know. Volatility. Let's see what that does. Applied volatility for the last week is below. I don't know what value we'd have to put there, but we want relatively low volatility. So I really don't know what to put on that one. It's below the volatility for the past month. Let's say, so last week we have very low volatility compared to what it was for the past month. Okay, let's see if we got some examples here. So ARM Holdings, and well, this is not the best chart. Let me go back over to here and just put in ARM. And let's see what we were given here. Well, we've got a stock that, yeah, it's somewhat channeling in the past couple of weeks, but it's also a very new stock as well. But yeah, it is stuck in a little bit of a channel, although it hasn't been doing it much, so I'm going to pass on that. Schlumberger, SLB. And I could probably do better scans using some other tools, but I'm not going to bother with it right this moment. There we go. Bring back my chart to the way I like it. And yes, Schlumberger is not the best channeling stock, but it looks like it's sideways. Near the bottom of the range now, even gap there. I'd like to find something channeling a little bit better than that. So I just keep going to the list. We got Monster, Well, BNS. Oops. Also sideways for the past couple months, but a little wide. We'll try BNS. Yeah. Should probably just put this on another page so I can see it and not have to click back and forth. So what else do I have here? Not the best. I'd really like to find kind of a tighter channel. This one was channeling, but we just broke out. It's not as easy to find it when you're looking for it. This is kind of channeling upwards. Again, I just want to find something that's somewhat channeling over the past several months and very tight. This one's better right here. And you see on the RSI, just what I was referring to, very, very slow movement in either direction. So we have been channeling for the most part since the 16th of January, and eventually prices will likely break out. Okay. Also, I mean, you could put in things like Bollinger Bands. Let me see, do I have that here? Yeah. And it's not the best example right now, but with the Bollinger Bands, often the bands will shrink when the volatility and price movement is going sideways, or volatility is dropping and price movement's going sideways. So you can see it is not really narrowing too much, but I bring back implied volatility again. That percentile is the one I like. Let's just save that and keep it, but keep turning it off. Sorry. I'll leave the average this time. So you can see we've been below the average volatility for a little while. Let's see what it shows. Very low volatility. We're at 11 right now compared to where we were before. That means if you took the last year's low and high of volatility, we're in the 11 percentile. We're very, very low. We're at the bottom of that range. So we have relatively low volatility compared to the past. And we've been below the average for 5 days. That's a channeling stock. That's a sideways moving stock. And again, markets can do this too. It's not just stocks. It could be futures, it could be Forex, anything. So how do we deal with this? Well, one way to deal with it is not to trade it. In sideways channeling markets, you're going to have smaller targets, so smaller profits. Now, typically, when you have smaller potential profits, you should also have smaller potential risk, because the greater the risk, the more you should be getting paid. And unfortunately, that's not always the case here, because eventually this will break out of the channel. It's just a matter of when, not if. Securities don't channel forever. They channel for a while and then break out. So one of the things that typically happens, okay, sideways moving price usually, again, not always, usually breaks in the same direction as it entered. What does that mean? If you were basically in an uptrend, it's likely to break out upwards and continue that move. And then obviously, if you have a downtrend, price is likely to break out downwards. Pretty simple. Oops, that's not what I wanted. There we go. So we get smaller targets because, again, we're in that channel. And in this case, you can see we were actually trending downwards here. We went into that sideways channel. Which means we're more likely to break to the downside than to the upside. especially the longer it channels, the more likely you are to break in that same direction. If it's a very short channel, it could go either way, but usually the longer the channel, fix this, the more likely price is to continue the trend. So it's not perfect, as I said before. Things always happen except for when they don't. But more likely than not, if you do enter a channel, you're likely to break out in the same direction that you entered rather than changing direction. So we had an uptrend at the bottom right here, went sideways, and we broke out. We actually went into another channel, although it was a downward sloping channel, which actually brings up another point. Channels usually slant opposite of their breakout. Not always, but channels usually break out opposite of their slant. So if they're slanting downwards like that, you're likely to break up. If you're slanting upwards, you're likely to break down. Of course, there's always exceptions. One's right here, kind of channeling upwards, and we broke up. But, the probabilities are such that you usually go in the same direction. Even at the bottom, we kind of went sideways in a channel for about a week and a half after a downtrend, and we ended up going the opposite direction. So the biggest difference to tell you if it's going to go in a new direction or if it's going to continue would be, are you at a zone? Are you at supply or demand? If you're at a zone, price may reverse the trend. If you're not at a zone, it's likely to just be a pause. I should say, really, is price at a zone? It's going to ask me to put in the price. That's okay. Grammarly goes crazy on me sometimes. So you can see that this one, for instance, we went into just a tiny little channel right there, and we ended up moving down. Well, the reason why we moved down was right there. We were coming up into that little area of supply, and that's why this one rallied up, turned, and went down. But if you're not in a zone, you're likely to continue. Even the slanted ones sometimes hit zones like this. There's a slant downwards. It ended up hitting that little bit of demand right here where we went sideways and gapped up, and that sent us to the upside. So right now, this channel, well, we've already punctured the demand zone. Therefore, we're more likely to continue the trend, right? Let's see. Oh, it's not going to let me draw. It's going to snap again. Great little nugget for you. I hope so. So yeah, currently on this stock, we are moving sideways in a channel, as I said. And we've already been through the demand zone, which means it's no longer likely to hold. We now have a much higher probability that we will break down. So if you have a higher probability of breaking a certain direction, you're probably more inclined to trade in that direction. So to increase your odds when you're in a channel, basically I'm now going into what should we be doing inside of a channel? Well, inside of a channel, inside channeling security, I should say. Now it's not the best trades, but the higher probability. I can't even spell now. Probably ILITY. There we go. There we go. The higher probability is to trade in the direction of the possible breakout? A great question. What if stock price is in the middle of the channel? Should we do an iron condor? Well, here's the problem with that. We could do an iron condor when prices are moving sideways. This is on Canadian Bank CM. The problem you're going to find is that volatility being low also lowers the premium of the asset. So you may not get a lot out of it. You typically want to do iron condors when you have higher volatility getting ready to drop. So it's kind of the opposite, right? So for now, on this CM, if we look at these options, if we try to do an iron condor, you definitely could. Let's see, iron condor. There it is. But the premiums may be quite low. Man, look at that spread. I definitely wouldn't do this one. Open interest is probably low and volume. Yeah, 28 contracts. That's what I figured. Anyway, but what was I saying? Yeah, basically, if we're moving sideways and volatility is low, that means you probably will not get a lot of premium out of it. So could you do that? Yes. However, instead, we're at what, 45 bucks? Instead of being a credit seller, perhaps we need to be a debit buyer. And if we do a vertical spread, we're at 45. So maybe we do, what's the top of the channel? About 46. It's a very tight channel, only $1, right? So looking at that, if we did a $1 spread, 45, 46, bought the puts right now at the bottom of the range, I'd probably try to split that. It's very wide. This is not the best security to use, obviously. The volume and open interest is low. But it's showing 55 cents. That's not good. I could probably knock a little off, or 65. The mid, it's using 55. Okay. So our profit is only going to be 45 cents, right? Because you can only profit the difference between the strikes minus the premium. Going back to the iron condor, around that 45, and it's showing a little better. Again, we got a big spread there. Actually, that's not the right one. Should be 45 put. And I don't know, maybe 47. Right, 46 and 44. There we go. So this is the one around, we're selling 46 and 45. So around those two zones. And yeah, you're getting 70 cents credit, which is not bad. And the premium you have to put in, max loss is only 30 bucks. So could you do that iron condor? Yes, you could. But typically the premiums are much lower than when the volatility is high. If the volatility is much higher than this, then normally you're going to get better opportunity. So that's why you should, not always, again, there's always exceptions, but typically when volume is low, or sorry, volatility is low, you're better off doing a debit rather than a credit. And in this case, the debit, well, again, it's 50 cents. It's not as good, but often in different securities it may be, especially if there's higher volume and better movement in these. Okay, so the other opportunity obviously would be buy the low, sell the high, trade inside the channel. And the other thing we could also do is add in that oscillator once more. Remember, oscillators typically work better than momentum indicators. So I don't know, we could use, what's what I'm thinking of, commodity channel index. Let me see, CCI. There it is. See if that gives us anything good. I'll get rid of the volatility for now. Maybe. Yeah. And even the RSI for now, although I could still use that. And with the CCI, I could try a smoothing line. There we go. So while we're in that sideways channel, once again, we may get signals from the oscillator. When you are oversold near the bottom of the range, you might get a buy signal telling you to trade until you get to the top of the range. And then you get the sell signal. But once more, you got to be careful because it looks as though that was a perfect signal. That's after we came off the low, but really it doesn't happen. The signal, the crossover doesn't happen until you've already finished that candle and you're starting the next one. So you just have to be very careful when you use those or drop to a smaller time frame. When I'm channeling like this, in that channeling security, first of all, we know this came in from a downward move. It's likely to continue down. Okay. So I'm better off looking for opportunities to short at the top of the range rather than buy the bottom of the range. So if I'm looking for bearish security and signals, this would be my trend time frame on the daily. I might go down to, say, even a 60-minute chart. And while we're in that sideways range now, I know the trend is sideways, but I can look for selling opportunities when we're touching the top of the range. And you can see right there, we got a sell signal coming in as we broke down. And I just target the bottom of the range. And look at that, there it went. And then, of course, at the bottom of the range, as it was bouncing, it gave me, oops, sorry, wrong button. It gave me a buy signal to exit. Now, could I also go long here? Yes, I could, right? Because we're still in a sideways channel. But remember, the risk is because we're in a sideways channel after a downward trend, we're likely to move in a downward trend to complete that breakout. Well, right there, you can see it failed to get to the upside. That's also a warning signal. If you cannot continue to touch both sides of the channel, you may be getting ready to break out of the channel. All right. So yeah, there's a lot of different ways to trade. But like I said, when it comes to channeling securities, we now know a little bit more about how to find the channel. Why is it not working? Come on. There it goes. It was just lagging. But we're likely to play more on the direction of the breakout. So again, if you entered a downward trend, we're likely to trade downwards. If you entered upwards, you're likely to see a breakout upwards. So we should look for either the bullish trades or the bearish trades when we're at the end of the channel. And signals for the end of that and the breakout would be momentum starts to pick up, right? If you see that picking up, you're likely to break out. Maybe volatility starts breaking out. So there's several different trade opportunities. Could be actually trading the underlying security, or we could trade the options on the underlying security as well. However, again, price it out, see what gives you the best return. Typically, when volatility is low, options are cheap. You want to be debit trading, buying, not selling. So iron condors are not necessarily the best opportunities. Question just came in. Do I use this for the 0 DTE? I do look at, the overall trend. You can see I've got lines everywhere here. But for instance, on the SPX, yeah, I'll look at trends. We're doing daily or intraday trade opportunities. So I might look to trade or look at the indicators. Apply volatility percentile. There we go. Oh, that only works on daily. So anyway, if I can get daily or something else, you can see volatility has been very, very low. It finally rose a little bit. But when that volatility is low, the 0 days till expiration trades don't collect as much premium. And as I was saying, I usually am looking for the trend on my intermediate time frame. So when it comes to, say, the SPX, I'm finding zones on the 5-minute chart. And I'm also finding zones on the 15-minute chart that I usually use for those trades. That means I'm looking for the trend on the 30-minute or trend on the 60-minute. I always multiply by 4, 5, or 6 to get an idea of what time frame I should be using. So if I'm finding zones on a 5-minute, for instance, a little rally base rally right there, a little demand, right? Well, the 30-minute trend, you see my RSI, that's not it there. There we go. And or volatility. Do I have a good implied volatility indicator that'll work? No idea which ones will work on intraday, because again, most of these are related to the daily volatility. But even there, that volatility indicator is bullish, right? So we are starting to increase in volatility on this 30-minute time frame. So we might be able to collect a little more premium. And again, I'd be looking to buy demand zones rather than sell supply. So if I were looking at a 15-minute zone, let's see if we have any. That's pretty much the same area, same thing. On the 15-minute zone, I'd be looking at the 60-minute trend. And we see that the trend is bullish, it's getting stronger, and volatility is rising. So yes, I will use that to a certain extent to let me know, should I be doing a bull put spread? Should I be doing a bear call spread? Or should I be doing iron condors? The trend is important to let me know which way it's going to go, because supply zones will break if the trend's against you. right here, and I got to finish this up and wrap up because I got things I got to get to for meetings. But right here, we have a trend in the upward direction. We're coming up to it on February 1st. This is a 5-minute supply zone. So on the 30-minute, as we're coming up to it, the trend is not very strong still. So there's a possibility of it bouncing off. And you see, as we came up to right there, we actually bounced off it for the first test. Now we're coming up to the zone again. Well, since we already went through part of it, we're going deeper. And as soon as that goes above 60, right there, we can get through it. Now we're at 58.85 right before the break. Now we're above. So the momentum picking up and probably volatility too would have told me we're going to break through that zone. So yes, I do use this to let me know which direction I should be trading as well. All right. Well, like I said, I got to get going, unfortunately, but I'm still available if you want to hang out with me in the SPX Cash Flow Secrets. If you're into options, if you're into futures, we've got the E-mini think tank. I would love to have you guys there. We put the links up for you. I think we could do that again. So Alyssa, if you wouldn't mind putting the links up for SPX and also for E-mini think tank. If not, I could do it as well. Just got to find my links. You might find them faster than me. I don't know. But yeah, if you got any questions, you can also try it out for free. All those programs, if you do the quarterly subscription, they come with a 2-week free trial. So you can, like I said, kick the tires, try it out absolutely free if you want. There we go. SPX Cash Flow Secrets. Perfect. And E-mini think tank link. Got it there too. So yeah, if you click on those links, like I said, you can try it out if you're interested. And if you got any more questions, you can email us support@wealthbuildershq.com. Thanks for being here, everybody. I got to go. Trade safe, trade well. Take care.